Palisades. The Los Angeles wildfires could cost between $52 and $57 billion in damage and economic loss. That's according to preliminary estimates from AccuWeather. State Farm, one of California's largest insurers, canceled hundreds of homeowners policies last summer in the Pacific Palisades, the area seeing the worst destruction in L.A. history. The insurance agency justifying the move as an attempt to avoid financial failure as California sees more wildfires. The announcement coming 9 months after State Farm declared that it would not issue new homeowner policies in the Golden State. Several private insurers also have cut coverage for at-risk areas across the state in the last 3 years, causing an insurance crisis, forcing thousands to turn a state-backed system called California's Fair Plan for Property Insurance. Joining me now is CRMBC CEO and insurance industry expert, Kaya Stanley. Kaya, thanks very much for being here. What are your thoughts on the insurance companies canceling all these homeowners policies a year ago?
This is going to create a ripple effect of devastation that goes far beyond the loss of life and buildings and residences, because this ripple is going to keep impacting both the people who think that they have insurance and they're actually underinsured, which is going to be one of the biggest problems that we see, as well as the skyrocketing insurance premiums that are going to happen because of the just catastrophic loss that there's just no surplus to cover this.
Yeah, I mean, it's extraordinary, the fact that you're dealing now with 5 fires. These massive losses that insurers are facing from the wildfires could lead to increased rates. How significant are you expecting that rate increase to be?
It's going to be catastrophic, and here's why. Now, there's going to be enough coverage to cover it, because that's why we have reinsurance. So the insurance company covers up to a certain amount, and then they go to the reinsurance level. But the thing is, the insurance company then passes on that reinsurance increase to the consumer. And right now, the biggest issue that we're going to see that I think people in the country don't even realize, most people think that they have insurance for replacement costs for their home, and they do not, for a variety of reasons. One of them is because they think that they have valued their home at a certain amount, and they find out later that their insurance carrier was just using some algorithm that had nothing to do with the actual replacement cost of their home. And then also just this massive level of devastation. When they go to rebuild an entire neighborhood and say that there's a limitation that the houses have to be rebuilt in the same way, with the same valuation, and in a certain amount of time, but yet the skyrocketing costs of labor and materials, the devastation that's coming is something that we can't even underestimate.
That's incredible. What about businesses? I mean, you're seeing businesses also burned to the ground. What should business owners be doing?
So one of the things, businesses that are still operational, they still need to think about workers' compensation, because they are still required to keep their employees safe from any smoke inhalation, smoke damage. So that's something that business owners need to be thinking about. In terms of businesses that are already receiving damage, they need to be talking to their carriers immediately. They need to be documenting. They need to be taking photos. And that goes for residences and for business owners.
Lee Carter, your thoughts?
One of the questions I have, you're talking a lot about the replacement value, but also we're talking about premiums that are coming down the road. And some people are saying this is just going to impact California, but isn't this going to impact the whole country? And then if it impacts the whole country, doesn't that then impact the housing market as a result? Because people need to be able to afford homeowners insurance to get mortgages.
Absolutely. You're absolutely right. And the point of insurance, obviously, is to spread risk, right? So we're collecting money from the many to cover the losses of the few. But when you have a catastrophic event like this, or say the hurricanes in Florida, it offsets that balance. And so even though there's reinsurance that's going to cover it, there is going to be a ripple effect where the premiums go up. And like you already pointed out, that carriers are going to leave the state. And the state of California, the insurance commissioner has implemented a regulation where they're going to require carriers that do business in the state of California to cover fire. However, it's not going to happen quickly, and it's not going to cover enough. It's still going to be higher premiums for less coverage.
All right, we'll leave it there, and we'll keep watching this. Kaya, thank you. Kaya Stanley joining us with the cost of this disaster.